Hi Sumera, why do you look so grim today?
Hi Feroz, I redeemed some investments this morning and I had to pay an exit load.
Oh my God. So you missed seeing them as well. So let's tell our viewers today about exit loads and their implications.
Yeah, we should in fact do just that. So when you invest with a fund, the AMC wants you to remain invested for a specific period of time. Should you withdraw prematurely, or even if you keep hopping between different funds, that's something that's undesirable for the fund houses. So to discourage these practices, the fund houses would levy a small penalty if you withdraw prematurely, and that's called the exit load.
Also, if several investors want to redeem their money at once, the fund manager is actually compelled to sell securities to help them redeem, which otherwise you would have held for a larger growth prospect. This can impact investors who stay behind.
So this is another reason why exit loads are levied, to discourage premature withdrawals.
This exit load can actually be a flat fee or a fee which decreases with time in a graded fashion as time progresses and becomes nil at a specific holding period.
Like if you have bought 100 units of 20 rupees each,
and if the NAV moves from 20 to 30 and your 2000 rupee investment has transformed itself to 3000 rupees after 6 months, and you choose to exit, 1% of 3000 rupees, which is 30 rupees, would be deducted from your investment value, and only 2970 rupees would be credited to your bank account. On the contrary, if you held it for 1 year, which is the exit load period, then this 30 rupees of exit load would have become zero, and the entire 3000 rupees would have been credited to your bank account.
So the point to note here is that the exit load is charged on the current value of your investments and not on your principal. Also, when you're doing investments via SIP and choose to redeem, each individual investment will be treated separately for the exit load, which means that certain earlier installments may be out of exit load obligation while the latter ones may not.
A little known fact is that exit loads charged to investors who go out of the fund get credited back into the pool and hence increases the NAV. So it's not all bad news. For long-term investors, it is a good news because the exit load comes to their credit.
All right, I have to admit I didn't know that.
I better get going, Sumera. I have a meeting to attend.
Feroz, there's an exit load if you don't stay for lunch.
Just because you paid an exit load today doesn't mean all of us actually have to give you company.
So today let's find out how a new fund works. This happens through a NFO or a new fund offer. As the name suggests, this is the first time that a fund offers units of a new scheme to its investors.